back. So this is gonna be the new setup moving forward, guys. So I'm gonna have everything very transparent. I'm gonna have Trade of 8, Trading View open, Forex Factory, and then yeah, the webcam. So you guys can see me crash out live. So to walk you through what I just took earlier, I just got back from the gym. I recorded the video, but it didn't record all the way. I had to mess with some recording bullshit. Anyways, so earlier today, I came in at around 8 o'clock. I woke up and I seen price started dumping, right? Like around 8 o'clock, 8:15. I woke up. Price started dumping, so I already knew what I wanted to look for. I marked out these levels of liquidity. I marked out on the buy side. I saw that New York AIM immediately took out this internal high over here at 253. I had buy side marked at 336 and 388 for buy side liquidity. For sell side liquidity, I saw that London session took itself out before New York AM started. So we already had one important level of liquidity marked out and taken out. So we really only had a few levels left to take out. We had Asia low, we had New York low in and of itself, and then this internal low here at 924. So these levels are going to be at, let's see, 987, 956, 924, and this New York PM high on Friday when we left off at 873. So I saw that price started dumping, right? Immediately price started dumping. Once I seen that price broke below New York AM low, I confirmed that the trend was going to be bearish. So once I saw the trend was bearish, I already saw that we took out these levels, right? Level liquidity taken out, level liquidity taken out, another level liquidity taken out. We finally formed a fair value gap on the way down. We didn't form anything on the way up, right? And my lowest level before that is 594. It's just a little bit too far. So I marked out this level and I went ahead and I looked for longs. I looked for longs because we had the MSS, we had the market structure shift, we had the draw on liquidity sweep, and then we had the inverse, right? So we had these inverse fair value gap. Now for me with this market, I've been seeing that a lot of wicks have been taking out the fair value gaps and filling the orders and coming back down before it makes its final move. So I waited for some manipulation and accumulation to occur down here on this fair value gap, and this is where I was at, like around 9 o'clock, right? So I seen this happen. I seen this wick take out the fair value gap. I seen it come back down, close below the fair value gap, come back up, close inside the fair value gap, and then open up again inside. So after that, I looked for a big drop in price, which was that big Doge candle. And once I saw that drop in price, I went ahead and decided to take longs after I was able to clear that fair value gap once again. So I took longs right here at 9:15 after the Doji candle up here, and I got filled somewhere around 873. I got stopped out at about 840 something, I believe 848. I believe I got stopped out. And yeah, dude, price was just chopping up. It looked like a fucking barcode, as you guys can see. I knew the MSS was coming. I just wasn't able to snipe when exactly it happened. But that's also my fault because I decided to try and snipe the bottom. You know what I mean? Like, you don't always have to snipe the bottom. You know, in hindsight, I went ahead and I marked out this other fair value gap earlier. So I had two fair value gaps marked out. This one, and one more up here, right? So what I initially wanted to see was for price to come back up, fill this fair value gap, potentially come into this fair value gap, and then take shorts back down, right? Obviously, it took a long time for that to even happen. I could have taken longs on the inverse of this fair value gap, targeted this low of this fair value gap, and then walk away with like the 1 RR, right? That's what I would have targeted in hindsight, right? Earlier I was at this trade and I was like, man, this would be beautiful if I was up and I would have seen that, I would have taken that 100%. Um, but I wasn't, so I'm following my rules. My rules is to trade from 8 a.m. to 11:30 or 12 p.m. Depending on how price is reacting during that time. So yeah, price was just on some bullshit today. Barcoding and shit. So my bias was correct. Unfortunately, my entry was not correct. I could have been a lot more patient on that entry. I waited about what I got here like at 8:15, and I got filled like an hour later, right? So I waited about an hour. I could wait longer. You know what I mean? Like, if you have a setup that you know is gonna come, or you're waiting on a setup, you have to wait for it to play out, and you can't just take whatever it is that you think might happen. You want to have a strong bias, have a setup, and then take it confidently and execute it well. I did not execute uh, patiently, right? I executed it okay. I mean, the fill was not bad, but the problem was that I was able to tell that it was starting to become a barcode and it was starting to chop out, and I still decided to take it, you know? So that's ill on my part, and that's where I as a trader have to develop myself. You know, if I would have been patient enough, even though there's no fair value gaps on the way up, I would have had to wait a long time for a fair value gap to form, right? I mean, for a fair value gap to form, for us to take this fair value gap, this 5 minute, right? Price would have slowly grinded into it and then started pumping, right? I could have entered somewhere around here. I would have narrowly got ticked out, but I think we would have held on to it. And we could have held on for at least a 2 to 1. You know, not be greedy, especially with the trailing drawdown that we have right now of 450. We don't have to be greedy. You know, we could definitely just take a 2 to 1 win and then move on with our day. You know, so this thing is all about being patient. It's all about being patient, and waiting for your setup. And I also need to understand that if even if my setup doesn't occur and I don't find my setup, then I have to stay cash. You know what I mean? If I have to protect my capital, then that's what I have to do. Protecting your capital over losing your capital is much more important than trying to force a trade. So moving forward tomorrow, I'm going to keep that in mind. It's very unfortunate because today's market was actually pretty good. I mean, it was very clear, very concise, right? We had London already taken out. This internal high got taken out. Price dropped. This fair value gap was very nice. We could have taken this fair value gap into shorts if we traded New York AM. Especially since we know that DOL got taken out already. I mean, it was just this right here alone was an A plus setup going into shorts and targeting maybe this Asia low, right? We would have came back up, back to our entry, and then came right back down to fill Asia and internal DOL. So price is moving very, very well. Aside from the chop that I got caught in, unfortunately, I did get caught up in chop. Chop. Price is moving pretty good. I can't even complain. Price is moving very, very well. So I'm gonna learn from this. I'm gonna continue to keep my strategy the same. You know, if we get the MSS and we get the DOL sweep, I'll go ahead and take an inverse. If not, I'll go ahead and wait for a continuation model. If price continues to go into the trend that it's going, I'll look for a continuation. In this instance, I just got caught up in chop, and it was very unfortunate. Very, very unfortunate. So yeah, we'll be back again tomorrow, and then we'll go from there. And so today, that would pretty much mark out my sixth consecutive loss in a row. Monday through Friday, I took an L on each day, and then today would be my sixth L. So I'm down about, I want to say about $1,000 in drawdown. Drawdown is very tough. You know, what I mean, you could have a winning trade and still be down and draw down like $50 or $100. It's ham, bro. Trader rate is crazy on Shirley drawdown. But um, I'm not gonna give up. You know, this isn't for everybody, but it is for me. And if you can't handle losses, then this isn't for you. If you can't handle losing consecutively, this isn't for you. If you don't know how to learn from your losses and fix them, this isn't for you. It's not for everybody. But for those that it is for, it is rewarding. And I've seen it. I've been funded 3 times. You know, I've blown 29 evals. I've blown 3 funded accounts, 3 performance accounts where you actually get paid on those. Um, it just goes to show that you can't rush the process. You know what I mean? Like my first funded account, I full ported it and I won and I got funded and I paid the activation fee and I didn't last. I didn't last because I didn't have an actual strategy. I didn't last because I didn't have risk management. I didn't last because I didn't have psychology. I didn't last because I didn't have any of these things and I just got lucky. You cannot get lucky in this market. You can get lucky 1 time, 2 times, but eventually the market will take back any money that you did not make following your rules. And that's the name of the game. It's not about how fast you get in the game. It's not about how fast you make your money. It's about how long you can last in the game. If you can last, you'll be here for a while. You will.